Even when you feel low, you can still go. Even when you feel slow, you can still go.
Hello and welcome to yet another learning video on price action. I hope you are learning a lot from this channel. So let's get started. Before moving further, if you are new to this channel and if this content delivers value, please subscribe because it helps this channel in YouTube algorithm. Suppose this is a weekly chart and price has moved up in 5 waves. On a lower time frame, this first wave will also look like this, which means that this first wave on a weekly time frame, will be internally divided into 5 subwaves on a lower time frame, say hourly or 4 hourly. And after this 5 wave, we will have a ABC correction, which will be the second wave on the weekly time frame. If you consider wave 1 as bullish, then wave 2 is the retracement for this wave. After this, it starts the third wave, which is bullish again, and this is the part where you should consider bullish patterns. After wave third is ended, you will again get a wave 4, which is bearish, and then again you will get a wave 5, which is bullish. So consider this like this, that if on the first wave internally is divided into 1, 2, 3, 4, 5, and at the end of, suppose this is a first wave and internally there is a breakout on the fifth wave, so will you consider this as a positive breakout or breakout failure? The answer is that it will more often result in a breakout failure. The reason is that this stage is the end of this wave, and after that you are expecting market to reverse, which means any bullish pattern that is formed in this area is bound to get reversed. And later on this video, we will see some examples in the recent charts. I hope this point is clear. Let me reiterate it again. At the end of first wave, this is internally divided into 5 subwaves. And when you try to catch breakouts at the end of this fifth wave, more often this will result in a breakout failure, as on a higher time frame, price will reverse. So if you get any bullish patterns like inverse head and shoulders in this part, then you should not take them. On the contrary, if you get a bearish pattern in this C wave, then more often it will reverse, because at the end of second wave, you will be expecting a bullish pattern. So if you get an inverse head and shoulders at the end of this C wave, then that is the good criteria to go long, because at the end of second wave, we are considering market to go up, which means after this correction, we are expecting market to go up, because this will be the first wave, then second, and after that we are expecting the third wave. I hope this point is also clear. Now suppose at the end of third wave, this internally will also be divided similarly like this. So let me copy this section. So this third wave is also internally divided like this. And at the end of third wave, if you're again getting a bullish breakout in this part, will you take it? The answer is no, because more probably the price will return once this third wave is ended. So you should be careful whether you are taking the breakouts on the fifth wave. The bullish breakouts will fail in this part, and the bearish breakout will fail once the correction is almost complete. If you are taking a bearish breakout just after this third wave is finished, then that will be a valid trade. However, if you are taking a bullish trade at this part, then that will result in a breakout failure. And if you're taking any trade at the end of this fourth wave that is bearish, then that will also result in a breakout failure. So I hope with the judgment of which wave is going on, you can make a wise decision that whether you have to take the breakout or there will be a breakout failure. Now let us see also how can you understand whether wave 1, second, third, fourth, fifth, which wave is going on. So for this, MACD is an important tool. When wave 1 is forming, suppose the histogram on MACD is like this. And after that, if you see once wave third start, there will be an increase in momentum, indicating there is no divergence. Once wave 3 ends, for wave 5, there will be always a divergence, which means MACD will be making a lower high, whereas price is going up. That is also again a point to indicate that there is lack of momentum and 5 wave are complete. So at this moment of time, you have to look for bearish patterns. And if you look for any bullish patterns, then more probably that will result in a breakout failure. Similarly, when price is falling, you will see more often that the strength of MACD is more at this point, and when strength of MACD falls at the C wave, then after that you should look for bullish patterns and not bearish patterns. So let us see some charts in the recent times. So Reliance recently gave a 5-wave upside. Let me show you. I had shared this in the group also. So this was the 5-wave up movement. And you can see after this 5, we got a breakout in this area. This was a major resistance and price did clear this. So this is the manipulation that was talked about in the earlier part of this video, that it looks like a genuine breakout, and this also looks like a inverse head and shoulders pattern. But if you see, this is actually the last wave, and after this you can see price will reverse. Although this is part of a overall bigger correction, so but the important point is that this up move is over, and if you look for a bullish pattern here, then this will result in a breakout failure. However, if you can see divergence also at this point of time, let me show you that on the MACD. So if you compare the MACD here, you can see there is a bearish divergence here. So that means that you have to look for a bearish pattern rather than bullish pattern, and that is, if you see, this is a head and shoulders again. And in this way, once with little understanding of which wave is going on, whether there is momentum that can be judged by using MACD, you can trade the chart patterns accurately and more precisely. Now let us see some more examples. Now let us see some bullish cases also. So if you go to the same chart at the bottom of this part, you can see at this point, Reliance gave a major breakout. And if you see the MACD, there was an increase in momentum, which means this is not the last wave. And you can see after this breakout was successful, which means that if at this moment of time, you should look for bearish, not bullish patterns, rather bearish. And you can see in this part, you got the bearish pattern, but it was a breakout failure. The reason is that this is not the last wave, and you should wait for the last wave to form. And you can see in this part of time when the MACD was showing divergence, and you can see that is the time to go bearish and not this part. I hope this point is also clear. I hope this video was helpful and your queries got solved. If you have any more questions, please post them as comments.